Alrighty, traders, this is Blake Morrow. You are listening to the Daily Roundup webinar. If you didn't see it, the euro dollar is at really critical support here. I'm concerned, and this is what I was just telling the guys in my office before I bolted over here for this webinar. It's really key because it's a head and shoulder pattern, all that fun jazz. But it's the breakout point from, this August high, the May low trend line. They all intersect at the same spot. So you got to be really careful, because if we break that, there's a good chance that we could start triggering stops and things could get a little unruly. So I would be very careful at this moment with the dollar. It's amazing to see the dollar as strong as it is, with risk aversion not prevalent in the market. So when you don't see stocks going down, and right now we see stocks going higher, yet it's the dollar is rallying not only against the euro, it's rallying against the cable. Cables come out of the ascending wedge. The Aussies trying to break down. The Kiwis off of support because we have New Zealand employment a little bit later. The dollar Canadian is firming up towards resistance. I mean, thing is there's a chance that we could, and by the way, there's a U.S. dollar Norwegian krona stopped at resistance. This is a double intersection as well, just like the euro. U.S. dollar Swedish krona is breaking out. There's all of these dollar pairs that are really on the cusp of moving. I'm wondering at this point if there's a whiff of risk aversion that the dollar is just going to rip all over the place. So that is something that I'm paying attention to. And it's interesting. I just as I was starting this, I tweeted about the euro. I have one retweet and one like. That means people have been buying this euro all day. Simon just said, "Hey Blake, count the hearts and retweets." Yeah, I mean, I'm telling you, man, people are out there shorting the dollar because they're scratching their head. They're thinking the exact same thing. Hey, man, stocks are up here. Why is the dollar up here? This is the second day in a row that we've seen the dollar rally in the face of stock market recovery. What the fudge sickles is going on? You know what I mean? So I'm not an advocate of shorting the euro into support, but I do have some dollars that I picked up. I mean, the things that haven't moved really, and I know some of you actually shorted the Aussie up when it was up at the round number here, or close to in the 90s, or maybe the Kiwi. You might have shorted that. I don't know, but the thing is I would be really careful, because if the euro does break down, might kickstart some dollar movement. I'm actually, the only dollar I'm short is the dollar yen right now, and I'm down like 4 pips, something. It was rallying but divergent, so I'm kind of sitting in it. But I'm a little nervous because, like I said, if the euro starts to move, what happens with the dollar yen? Maybe the dollar yen starts to break, and I've got a really tight stop. I mean, my stop is 21. I mean, my stop is like a few pips away, so I'm not that nervous about it. But it's just, it's like, do I stick around in that? I don't know. But if the dollar is going to turn, if it's going to turn, if the dollar is going to turn lower, it's going to turn here, and the euro is going to bounce. I just don't, I'm not buying it right now. I'm just not. Okay. Yeah, it's crazy. It's crazy. What else is crazy? Freaking stock market. And I just said this in the chat room, and I'm going to say it to you guys again. And I'm definitely not comfortable being short. I'm not short too much, but still, it's like, all right, we ripped past this previous high, past the resistance zone, probably just enough to stop everybody out. I'm not stopped out. Sorry. Yeah, I meant to hit the mute button, but I didn't get to it on time. Sorry about that. It's starting to warm up here. So we get allergies. Things start to grow because it just rained like bonkers over the last week, which in the desert, we don't get a lot of rain. So when it rains, everything starts to bloom like a week later. That's what happens when scorched earth is blessed with a week's worth of water. It's like, ooh, let's grow everything, because we get a lot of sunlight here. Anyway, going back to what I was saying, the S&P though, I mean, this has been one hell of a rally. I mean, look at the NASDAQ, we're up 6% just from, basically Friday. I mean, that's 48 hours, right? It's 6%. S&P is up like 5.5%. That's ridiculous. But I was just telling everybody in the chat room. If you're not in the chat room, I was just telling you guys, telling everybody else about it. Because if you're on a light version and you're just tuning in, I was just saying in the chat room, back in the day, whenever you see mass, I mean, this to me is like pretty massive. I mean, think about this. This is here. Let's go to a 4-hour chart, right? And this is the S&P. I mean, look at normal moves and then look what's happened the last few days. Sell off, rally, sell off, rally. This is put it into context for you. This is what, a 4% decline? 4% decline, 3% rally, another 4.5% decline, and a 5% rally off the lows. When you see that type of volatility back in the day, that would signal that you're probably closer to a bottom or a top. So tradable. I don't know if today's rules apply so much as they once have, but absent of a blow off top, we might be trying to form some sort of top here. Now, I also said in the chat room, just give us up 20% intraday, just rally. I mean, God, wouldn't it be great if the S&P just went like this and blew everybody out, myself included? Just we rally like up 11% intraday and then come back down, then we'd know the top is in. I'd love that, because once you got that taken care of, then you go, oh wow, I got two-way action coming. This is awesome. Right now it's possible. It's possible. Anyway, Garrett said, when I wake up in the morning, I try to screen the markets to find some support and resistance targets and what price action to be expected. Totally unnecessary work. Just buy stocks every morning, leave the screens, have fun, and cash in during the evening. I cannot go wrong. I am frustrated. You're not the only one frustrated, Gary. You're really not. And that type of frustration usually peaks when, the markets are doing silly things. I mean, these are really incredible markets. The good news is if it is probably going to start creating some good volatility in currencies. I was just looking at this chart. This is probably one of the saddest charts that you're going to find. This is the euro US dollar implied volatility chart. So let me just show you something. And this is, you guys don't get a chance to see this all the time. So I want to show you 5 years of implied volatility. Now, obviously this is COVID. So oops, here, let me grab a pen. Like, stop. Okay, there we go. You guys, I'm sorry, I'm just, okay. This is COVID, right? So you kind of got to, scratch that out. I mean, that was great opportunities. Look, if there was a time that I made money in 2020, it was that quarter. And I know it's sad to say, but I that was when I made all my money last year. That was it. Okay. It was COVID. I mean, it was bonkers, right? That's when volatility picked up. This type of volatility at these levels, when you're talking about 4, 5, 6, it's very difficult to make money. These are the types of, like, if you think about 2016, this is like some of my best years of trading was back here, right? So once you start seeing volatility bounce around between like 8 and 12, which we'll get, guys, don't think we won't. That's when things start to get awesome. And we're probably on the cusp of that, I would say now. This is very similar. This reminds me of the VIX. Let me delete all this crap. Clear all drawings. Yes. Okay. And let me go back to mouse. Let's pull up the VIX. Oops. So it was very similar to the VIX, euro dollar implied volatility, because you'll notice that we built a shelf in euro or S&P volatility, and that euro dollar implied volatility has built a new shelf of support as well. So you can see the same thing. See how we built that shelf of support? And that's good. That's good news for us that trade currencies, and that's predominantly. And I've been telling people that I'm really looking forward to this year, because I think volatility is going to start to increase in currencies, and I think that's what we're starting to see. We're starting to see implied volatility really base, and once you start getting central banks, and I would assume that's probably going into spring, you start to see central banks altering their, expectations on inflation expectations. And so then we're going to start thinking when a rate's going to lift off again. That's going to create volatility. Also, I believe that, we are going to have an equity market correction, whether it's today or next week or, a couple of weeks from now. That's also going to bring us in volatility. So I think that those two things alone is going to put volatility and the implied volatility in the euro dollar back at 8. But it's hard to trade when you're at 5 and 6. It just is, currency wise, and it makes life difficult just in general, trading, because you just don't get as many opportunities. But I do believe that that's going higher. And that's why all those people that say that FX volatility is dying, or it's dead, or it's dying, it's going to die a slow death, I don't agree with that. I really think that this base here is at a different level than previous. And we're starting to, get ready, gearing up for a new volatility regime in the FX market. Okay. So anyway, I just wanted to, let you guys know that, to keep your head up, and I think there's more sun will be shining on us FX traders in the months ahead. So keep your chin up. And that goes for equities too. I really don't believe that equities are going to stay up here all that long. I don't know. We were just talking in the chat room about what's the catalyst. Is there a catalyst? I don't necessarily think there needs to be a catalyst personally, but that doesn't mean that there won't be one. I actually, what I think is, if I have to just have to, and I'm going to just leave you with this. If I have to guess how this is going to happen, we are not going to get a catalyst that drives us lower. We're going to start to see the market work its way lower, right? Over time, over the course of the next few weeks or month or whatever. And then what's going to happen is we're going to find out that the vaccine rollout's slow, efficacy is down, more, COVID variants are coming around. And I know it's doom and gloom stuff, but I think that's going to be what, and then you're going to start to see the markets go down again, because I really am very concerned about COVID still. I don't think we're past it. I don't. And I hate to say that. I want to be hopeful, but there's a lot of mistrust. The vaccine rollouts are really slow here in the US. There's a lot of mistrust just with vaccines in general. So I think the timeline is going to be a lot slower. I know a lot of people that are like, they're not anti-vaxxers. They're just people like, you first. I'll see how you're doing in 3 or 4 months time. You know what I mean? There's a lot of those people around. And I think that, the mistrust has been, obviously that seed has been planted for the last 12 months or so. And I think that that's still playing out. I hope it's not that way, because look, I really would like to travel this summer. We were talking about going to Greece because we missed our Greece trip last summer. I'd love to go see my partners in Greece. I'd love to go visit my wife's, homeland, if you will. So I'm trying to be optimistic. I just, I'm also trying to, be realist and navigate through these markets as well. So guys and gals, hey, thanks for being here with me today. And I'll be in the chat rooms, or I'll see you tomorrow morning. Oh, by the way, can I ask you this really quick before you go? I know a couple of people already signed off. How did you like the bias chart and then question and answer session after the public face webinar? Did you guys appreciate that? Did you guys like that? I just want to make sure it's value driven for you guys. Alan said he loved it. Clyde said very good. Lorraine said love the schedule. Okay. I know it's tough. And Jason said, yeah, it was great. The opportunity to have your questions answered is awesome. Yeah. No, and depending on the day, I'll try to stick around longer too. Today was obviously very active when we had this really big move. So I had to get to trading. But a lot of days when I do these bias charts, it's not going to be that situation. So I'll be able to, take a step back, make sure I answer questions, not just Steve and Stelios, but those guys are obviously perfectly equipped to answer any questions that come. But I just want to make sure that you guys know that you're all very much appreciated. And I want to make sure that you're taken care of first and foremost. That's all that matters. All right. Take care. Oh, Craig says the only thing is market open, so timing wise may be difficult sometimes. I know it definitely is going to be more challenging for me, but I didn't want to make it too early because it really throws off a lot of people in Europe and in Asia. So anyway, but Hugo says, thanks, Blake. I missed the first part of the bias chart today. The voice reminder from the website didn't work today, the webinar online voice, but I like the new format a lot. Okay, well, thanks, Hugo. Yeah, sorry about that. I noticed that it's kind of off every once in a while, the little voice thing that goes on. But just remember that it is at, wait, hold on, what time is it? 9 a.m. Eastern is when the second half starts, the bias chart starts. I think that's correct. Yeah. All right. Have a good one, guys. Take care. Thank you.